Welcome back everyone to Tradespoon Live TV. I'm Vlad Karpel, founder of Tradespoon. I would also like to welcome back our favorite guest, Joe Cusick from TradingBlock.com.
Hey, thanks Vlad, and it's great to be back. Let's jump into the data this week on Wall Street. I want to take a look at the first headline number, which is consumer credit. I took a look at the retail sales ETF XRT, which is pricing in about $1.85 or roughly around 2% move. And the Z-score is coming in at a 0.41, which is an indication that implied volatility is on the move to the upside. And this being almost about a half standard deviation away from the mean on implied volatility, it's keeping retail on the radar. Even though we're resuming the trend to the upside, volatility is on the move.
Great, and we have tools to detect these volatility moves. So, Joe, Tradespoon users can go to our bullish and bearish search tool, Tradespoon Idea tool, and we sort by industry and see that we have two bulls that you can see on your screen. One is the Home Depot and one is the Foot Locker. For the bears, we have three names to follow. One is the Fossil, one is the American Eagle, and Ruby Tuesday.
Right, and stick around, folks, and we'll cover some of those names and the mechanics of the pick this week. Looking at the rest of the data this week, we have the FOMC minutes. There's been a lot of focus on whether or not the Fed is going to be even pulling back even more on their purchases. We want to get the language and see if there's anything that has changed dramatically. We're going to look at the ETF that tracks the S&Ps, and that's the Spiders. SPY is the ticker. There's a $2.90 move, or about a percent, 1.5% being priced in to the large cap ETF as far as movement in the underlying. Also, the Z-score is at 0.31. So IV is on the move. If you start to see the Z-score, Vlad, going up above 1, that's where you really see the potential for some big moves, some violent moves. And I finally want to turn to the commodity markets and take a look at crude and natural gas. Now, crude and natural gas have come off of their lows. And taking a look at USO, which is the ETF that tracks crude, it's pricing in the potential of 95 cents move. And looking at the Nat Gas ETF, UNG, it's pricing in about a 75% move. So we want to keep an eye on that, especially since it's been getting colder here. We're in the Midwest. I actually turned my heat on this weekend. So, we want to keep an eye on this.
Yes, and in terms of our research, if you look at the Tradespoon conviction list, we have only one petroleum name at this point, which is a Halliburton, ticker symbol HAL. And again, if you want to access this tool on the Tradespoon site to see the list of our bullish stock and bearish stock based on our research, both fundamental and technical analysis, just go to My Tools and click on Tradespoon Bulls or Tradespoon Bears. This wraps up this week on the Wall Street week ahead. Folks, we also have two great webinars. One is on Wednesday and one is on Friday, where we cover trading volatility in your portfolio with a special guest and former VIX market maker, Dan Deming. So be sure to check it out Wednesday and Friday. And if you go to Tools, upcoming webinars, you can also see all of our webinars that we have this week. And now we want to turn our attention to previous picks that we recommended at Tradespoon. This is where we break down the logic and give you the insights into our previous trade recommendation as far as adjustments or as far as any ideas of how to add new picks. So I want to take two names we covered in the previous trade recommendations. One is the Foot Locker and one is the American Eagle, ticker symbol AEO. Let's start with the Foot Locker, ticker symbol FL. FL has demonstrated a pattern of neutral to positive technical signs, and it looks undervalued at the current price level. Foot Locker has exceeded one and met 3 of the last 4 earnings estimates. Foot Locker's strong financial performance has so far reflected accordingly on the stock price and our conviction list. We expect it to continue, so our overall score for Foot Locker is 8.2. We just updated the score from 8.2 to 10, both in the long and short term for Foot Locker in terms of our convictions. Taking a look at the probabilities of the stock trading between certain levels, we have a 60.36% probability of Foot Locker trading between price levels $61 and $51. So Joe, do you have any insights on the Foot Locker?
Yeah, all right, Vlad. Now, you have to see that given this range that Vlad just gave you and the probabilities, let's take a look at some of the Tradespoon picks that you had and you dished out earlier the last couple weeks. First, we want to take a look at the stock trade. You opened the stock trade at 56.96, and the profit and loss target was between 64 and 48. which statistically over the next 50 days has less than 15% probability of reaching each one of these levels. Now with the Z-score, that's that level of implied volatility that we want to look at. It's at a 0.96, which means that the mean right now, that average, the current IV is almost 1% higher, or 1 point higher. This is telling us that the options have priced in the potential for some significant violent moves, which makes sense since we have consumer credit upon us and we're going into the new earnings cycle. So if you have a short-term move, manage this tightly. You know, the stock's a little bit off from entry. So one thing that you could do is if you're in the stock, manage it tightly with your stops. Move the stop up when the stock moves to the upside. Take an opportunity to maybe take profits, especially if you have a quick, big move to the upside. Now, taking a look at the options trade, you suggested the no $52.50 calls at 545. You need the stock to hit 57.90 for break even between now and November expiration. And there is about a 76% probability of touching that level, but only a 36% probability of expiring at that level. So keep an eye on that. Time decay is going to be your enemy on that long call. I would either cut the position if the stock just sits here and starts to grind over the next week or two and just get out of it. Save some capital there. What I would also do is look to potentially sell the $57.50 call and spread off the remaining time and volatility risk that you have in the position on the $52.50 calls, which gets us into the spread trade. If you initiated the spread trade at the 57.50 by buying those and selling the 57.50 calls to offset that time and premium risk, you did the spread for $1.55 back a couple weeks ago. It's still trading right around that level. So this is the one that's least affected by the small pullback in the stock. You need some more time for the stock to move to the upside. But if it gets up close to that 57.50 level, you should be looking to pull this trade off, especially if it does it fast. Take an opportunity, but be patient.
It makes sense. So we have two services. One is the premium service where we provide one recommendation a day, and we also have an elite service where we provide one recommendation a week. We both provide bullish and bearish strategies. So now I'd like to turn our attention to one of our bearish picks, ticker symbol AEO. American Eagle has demonstrated a pattern of, again, neutral to negative technical signs, and it looks correctly valued at the current price levels. American Eagle has met all of the 4-quarter earnings estimates, and AEO has been plunging for a long time, and it's at critical support level at around $10. It is now hitting previous resistance roughly at $14.50. So you see this overhead resistance, and the short-term future of the stock will be determined at this stage whenever it can break this critical overhead resistance at $14.50. So currently our overall score for AEO is 5.5. Taking a look at the probabilities, the stock has a 76 probability of being between $17.50 and $12. Joe, how can we use the previous picks from 2013 in formulating some of our ideas?
You know what, this is a great idea. As you can see, the previous pick is up on the screen. And, you know, Vlad, having the stock, having updated both the fundamental and probability analysis that you showed, let's take a look. In September of 2013, you had a similar bearish view. The stock was trading around $16.90, and today it's trading around $14.50, and it's right at that resistance, right off of those previous highs that we saw where it pulled back and tested 10, which was that low that you described. Short stock traders, if you're in this particular position, you got to stop at right around $16.50. In other words, if the stock gets through $14.50, it's going to really start to challenge for those previous highs. If, in fact, you are in the short stock position or you decide to short stock at $14.50, start looking at taking profits at right around $13.50. The risk reward doesn't make much sense if you're saying, well, I'm going to risk $2 to make $1. But going into the critical numbers that we have right now with the consumer credit and earnings, and then the retail sector is moving, but it hasn't been leading. There's about an 84% probability of touching 13.5, and if we can get that quick, take the profits. But we have to respect the momentum above 14.5 because there's still a 71% probability of touching 16.5. And that's about all the upside risk that you should be willing to take. Now, taking a look at the November options, the No 15 puts are trading for around $1. And there's around a 77% probability of touching the break-even point, in other words, at 14. And only about a 56% probability of touching 13.5. So I would look more towards the spread strategy than either the short stock or the single leg. This is going to cut your premium risk and your break-even point to 14.5 on those $15 puts. So if you take the 15 and you can either look at the 15.13 or the 15.14 spread, do that for 55 cents. You're looking at a lower barrier that you'll have to get through to potentially have a nice profit, and you still have a decent probability of touching that $14 level at right around a little under 70%. And so again, I would look at the spread trade if I'm going to. And also, this is how you can use some of the previous picks and the mechanics of that. Even though the stock has changed, the fundamentals are still there. Your ratings were bearish. Your technicals are showing bearish. This is a great opportunity for folks to look back and how they can utilize the previous picks.
Yes, and if you look at our recorded webinars on the site, you will see that we are advocating the use of statistics and financial analysis. It is important to have a conviction based on the long-term and short-term trends and ratings, but ultimately you have to look at the statistics, you have to look at the past 50 days, and you can see what the probabilities of stock being at a certain price level when you structure your trade, whether you get into a position or whether you get out of the position. So I encourage you to look at our recorded webinars where we talk about probability calculator and how to find these statistical analysis for each of our trade. And for every trade recommendation that we do at Tradespoon, if you look at the probability calculator on one of the tabs, you will see that we are doing this research for you, and we show statistical analysis, both historical volatility and implied volatility for you. Welcome to Tool Time segment, and this is a segment where we'd like to talk about technology that we build at Tradespoon to help you trade smarter. When using the Trade Idea tool, which is one of our first tools that we have at Tradespoon, you need to first choose a ranking model, and then you choose volatility, and then you use a time horizon. So it gives you different choices to tailor toward your trading style. In this case, third was risk tolerance. So I choose one, which is a low risk tolerance. And finally, fourth, where I want bullish or bearish ideas. In this case, I chose bullish ideas that you can see on your screen. When I find an idea I like, in this case, I would look at Alcoa, ticker symbol AA, and I click on Analyze, where you can see the probability calculator and find the proper strike prices. Now, Joe, this is where you can plug the bullish information into the Trading Block Trade Builder to get some strategies that fit the guidelines that I just laid out and gives you kind of a long-term conviction.
Yeah, now that you've done the hard part for me, this is great. All I have to do is look for a strategy. Now first, on the Trading Block website, you go to tradingblock.com, you log in, and you click Find. Then you're going to second click Trade Builder. And then third, you're going to plug in your criteria for AA is the stock symbol. In this case, we're going to put a price target around 17, which has a probability of touching that level of around 60%. And we're going to shoot for an expiration, and you can see that the third point on this is in the third week of November. And we're going to put a risk capital of $1,000. Now, typically we use anywhere from 1.5% to 5%. I don't suggest doing more than 5% of your portfolio in any one position. Finally, the fourth point is I want to look for the highest probability of any profit. You can see that in the right-hand side. I click that, and that's a bull call spread. It roughly has around a 65% probability of having any profit. And then what I could do is that I could just click, seeing that the volatility, the profitability, the P&L graph, and from there assess whether or not I want to place a trade, whether or not it fits my objectives and my risk tolerances. And folks, this is a really easy way to take all of the heavy lifting and using the Tradespoon side, and then coming in and using our platform to go in and try to find an idea and a strategy that fits all of the fundamental and technical information that you did. So this is a great marriage right now.
Yes, I agree. And Tradespoon Trade Idea tool, it gives you long-term conviction, 1 through 10, where 10 we're very bullish on the stock, looking at the 6 months to 18 months horizon. But we also look at the short-term trend, where we try to find 50 to 75 days till expiration and find stocks that we think will be either higher or lower. And higher means 10 on the short-term trend, and 1 means there is low probability, there is a high probability they'll be lower. So use Tradespoon idea tool. We're looking at the technical analysis such as Bollinger Bands, and we're looking at the Fibonacci retracement, but we're also looking at the unusual options activity in any of those names. So check out this tool. I think you'll enjoy it, and it definitely gives you ideas about how to trade.
You know what? I did see something that was interesting on that last graphic, which was on the Trade Ideas tool. You actually saw not just 50, which I had seen previously on the Tradespoon site as far as one an idea. You actually saw different days.
Yes.
Could you explain that a little bit to me? Because I thought that was interesting, because we have a huge group of traders that trade weekly, monthly, quarterly, and so forth, both using options and stocks or a combination of both. What is that telling us, those days? I saw somewhere at 800, somewhere at 3, somewhere at 50.
So it's a very good question. The idea is that we look at the trades days till expiration, and we are looking at the unusual options volume activity, whether it's open interest or option volume or spikes in implied volatility. So if you see 3 days, that means it's a Friday's expiration. If you see 15 days, it might be a weekly expiration. If you see 800, then these are the leaps. So we're looking at the unusual option activity at the expiration months, and then we calculated how many days between now until that expiration, and that's why you see days till expiration based on the unusual volume activity for that strike price and that expiration months. And then if you click on analyze, we're doing statistical analysis of what are the probabilities of the stock being at a certain price level by that expiration.
So that's huge for me, because if you're using the Trade Builder tool at Trading Block, I can actually use that information, and that gives me, it'll then instruct the tool, if there was 800 days, I could put an expiration in 2016, which is about 500 days, and it would actually give me some leap strategies. Or I could go in, and if it had 3 days, the Trade Builder tool at Trading Block could actually say, all right, I'm going to put only 3 days, and it could actually look at a potential weekly idea, and I'm going to get the highest probability of any profit type of strategy that's going to fit my risk tolerance and objectives. I'm loving this. Great. This is pretty cool. I didn't even think of this before we started the segment today, so I'm pretty excited. So thank you for those insights.
Right. So please look at the tools and trade idea tools on the Tradespoon site. You can also see our upcoming webinars where Joe and I present to our subscribers. We have a webinar on Wednesday at 12 o'clock. We also have a webinar on Friday at 12 o'clock. So, and you can also see all of the archive content on the Tradespoon training section. So have a great trading week. And Joe, thank you for being with us.
Thanks, Vlad.
And we'll see you next week.